Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Hello guys, welcome again to the channel. For those of you who are new, welcome. This is where we talk about market profile. So we talk, we trade, we do everything here market profile. So here you'll see how I manage my portfolio, how I show traders that you don't need to trade big to make money. I show you how to keep losses incredibly small. In fact, for the most part, your portfolio will practically hardly ever be in the red. For the few times that you're going to have to be managing trades, going flat, managing profits, taking money off the table, you're balancing your portfolio. So when you get those outlier moves, it really makes an impact. I show traders how to diversify. It's not the most glamorous way of trading. I try and show traders that it's important that you're not taking massive amounts of risk here, that it's important that if you do, you'll get big blowouts. And the traders out there that are taking massive risks, and we see it all the time, yes, you might see some really large P&Ls, but on the same token, I can assure you a lot of those guys are curling up in bed at night crying when they get those big heavy hits. We see it all the time. We know how it feels, right? So it's very important that we balance our trading. And again, trading is a game of probabilities. We do believe that here, and as people who use market profile, we understand that it is a game of probabilities. As professional traders, anyone who's been in the institutional space for any amount of time would have encountered market profile. If they haven't, then they probably weren't in the institutional space. But market profile is what 90% of institutions would use. It's on all the major institutional platforms, whether it's CQG, Sierra Charts, Window Trader, it's all there. So again, I built a customized version for MT4. Sadly, I don't have it available for MT5. But once again, I talk you through how I use it, how I use that to position all my trades, and how you can do that too. I run through my portfolio here so guys can see what it is I'm trading. So again, I try and flash my P&L on the screen, not because of the numbers. It's mainly because I want people to understand what's going on, how I'm viewing things, and how I'm executing against that. Yeah, that's basically it. For those of you guys who are new, who are not new to the channel, who've been seeing my videos, then hey, it's just another video. So anyway, I'm going to run through some of my portfolio now. So again, the Aussie dollar, what can I say? So we had we still have this big gap in value. We're basing out responsive by a Y period. We're really basing up here. I do think we're going to make a run to the upside next week. I think we're a little bit oversold on this. We're trading under a liquidity area. It seems like we found liquidity, so we're going to bounce. So again, it's really interesting when we try and tie in some liquidity concepts around market profile. We do know that a lot of stops tend to sit below these lows. So again, traders who are trying to get long, obviously they go down, find some liquidity, get stops out, and then run up. So tight stops will get hit. It's a great place to find liquidity. So once again, we'll see a lot of trading happening here and then rebounds. When we do get these cataclysmic drops, especially when, we're looking at these commodity dollars, it can be a bit wild. A lot of it could be because of monetary policy. It could be because of other central bank action. So we want to be very careful when we get these big parabolic drops. But the profile's given us some really good information here, got a responsive bias. So it's very likely that we might start to track back. Again, it was already a really good level to buy anyway, once we were under this sort of weekly liquidity path. I mean, in my opinion, I always like to have my weekly profile up. It's really important because then I can actually execute within the larger time frame without actually having to change my viewfinder into do a top-down sort of analysis. I can pretty much see it all here. So again, you can see that same liquidity play to the top side. We did see the offer stack here, so it made sense that we're going to start trading back down. You know, I traded dollar CAD on this one, got some really good runs, but again, we see quite a few value trades this week as well. So it's been quite interesting for the Aussie dollar, but I prepare for us to move to the upside. Again, directionally, trade location wise, it made sense to be long. We were long at one point for the gap. It didn't happen, and we had to readjust on this position, as we can recall from previous videos. Crude oil, really good position for me. This has been one of my best positions running because we got this really early, dip back into the value lows. Again, responsive buy on S period. It was an absolute no-brainer. Bid stack in. We started to consolidate. Some people might have panicked with the offer stack in here, but then now we've got a bit of a washout, some liquidity hunting. I think with this test, the next move is going to be a break to the upside. Again, even if we do break to the downside, remember we've got decent support here, so it could be just a minor test and a continuation to the upside. So I'm expecting a slight bullish run in crude. So I'm holding these positions, but the one thing that I've done differently is that I've run them to break even. Right, very important part when we come to portfolio management is that you want to be breaking even your trade. So if you've got a bit of distance, you want to take some risk off the table, you want to break even. A lot of people don't understand why a professional trader will break even on a trade. You want to break even because a lot of these trades incur margin, and a lot of these trades incur, if you were to go down or into negative equity, you're going to find that you're not going to be able to reallocate because you're losing money on that trade. So to avoid that is that you can create a scenario where you're risk free on that position, which means you can add another equal size position without necessarily increasing your overall risk exposure to loss. Right, so whilst you might need a little bit more margin now to hold an additional position against what you've got, but you don't have any risk exposure. So you can come into another trade and assume that that trade is a dunner. Either it's going to finish at target or it's going to finish for zero. It's great to be flat, so we want to break even, and that gives us an opportunity to put more trades on and then focus on another pretty decent position. The S&P 500, I was structurally bullish on this one. I did say that to you guys, that the way we're setting up, we were structurally bullish, so I was looking for an upside break. I tend to build structure lock before I think about, okay, I'm going to get into the profile and see what I want to get into. So again, with the S&P, we got this early on the dip. When we're dipping down 2 weeks ago, we did say buy the S&P. Right, we went up, tested those highs. Again, this is a prior level based on range that I'd set, the 4 to 10. And I was like, well, based on natural range, we should sell off from there, possibly a value trade. But if we get down here, buy the dip again. Right, so I think this week we're doing a lot of buy the dip stuff on the S&P. So I'm expecting we're either going to break up to finish the week. Then next week, it's a bank holiday on Monday. So next week is going to look a lot like a volatile week, right? Because we're going to bounce up and down. I'm hoping that next week we start to form balances up here and break to the upside. It'll be very good for me in terms of my put selling strategies, because again, I sell premium. So I do want to see the S&P keep going higher. So I'm a little bit biased. But that said, I'm not letting my bias slip into my analysis, right? I can clearly see where the support levels are. I can clearly see where the responsive buy is tagged in. So I'm a little bit more convicted on these kind of trades when I see these kind of setups. Gold has been an interesting one. We had a long position here when we dipped into value low with the expectation we're going to go higher and do a value trade. We kind of semi did that, then all of a sudden we kind of turned out, did a bit of a stop punt again. So there's a feeling here there's a lot of liquidity stuff going on. And one thing I did say is that the volume is really tough here. If we start to break under these lows, right? So this week specifically, if we take this low, then we're re-entering new value. So you can actually see the rejection here from attacking new value. So this is where everything separates. So realistically, if we're going to look at it structurally, this is all new value, right? This is separate value. So the chart has divided itself. So at this point, anything within this range here is going to pretty much cause some problems. So from my point of view, it's all about assessing where new value is. So again, we got rejected. Good sign that gold might bounce. Again, if we start tracking lower under 1938, it's a great value trade in my opinion. Even though we're really deep in the hole, it could be a value trade if you want to go short this, or you could look for a bounce, right? Which is what I would do. I tend to look for good trade location, right? I'm a market profile trader. I want to trade from an advantageous position. I don't want to trade, like I did a value trade on crude oil, right? And we'll come to that. But I did a value trade on crude oil this week, and we all kind of knew how that looked, right? It was an ad, right? So I did a value trade on an ad, right? So what happened here, just back up to crude, is that we tested the downside and started to pull back, and my synopsis was that, well, we're going to pull back into value, so we'll have an opportunity to trade not just this value, and possibly into the office stack. So as we got here and started to weaken, I covered that trade because all I was looking for was the value trade, and I had a slightly bigger size on to take advantage of that. And I was able to bank some profits and also keep leveling my portfolio without changing my initial core positions that I was long on, right? So it's sometimes with trading as a professional, you want to use your brain a little bit. You want to be clever. You want to analyze, okay, what's the possible payoff, probability of the trade, what risk am I putting on, what kind of position I'm in, etc. So you just want to be a little bit smart about it, and I think that's kind of what sets sometimes some traders apart from others. Cable, again, we were structurally bullish on this. We did dip below, again, very similar to gold. A lot of liquidity plays. We traded this value, but the market's not liking this, and we've got a bit of a rejection. So again, we're going to open inside value next week, more than likely. So get ready, guys. It's going to be a crazy week. Always is when we go inside value. I was structurally bullish on dollar yen. Sadly, I had a position on this briefly. I wasn't really sure about it because I was worried about dollar weakness, but it seems like the yen is incredibly weak. It all boils down to monetary policy in Japan. So, you know, whenever you get these moves against the yen, you kind of want to take advantage of them. I was a little bit slow on this one, but I did play it into sterling yen, right? So again, I kind of had something on it, but not really dollar yen. And I had a position on dollar yen. Should I have kept it? Absolutely. But again, no regrets, right? When we think about it, we did the professional thing. We protected ourselves. Dollar CAD, we're trading up. I'm structurally bearish on dollar CAD. You know, I've had good trades on this one. Yeah, this has been great. You guys have followed this in previous videos. We had the short, we traded it back, we got the rip back, but I was never confident we could take out this bid stack. But again, we're trading up to the office stack. If we break to the upside, then again, it looks like the Canadian's pretty weak, and then we're going to get, in my opinion, we're going to retest the liquidity highs so we can start another bullish run on dollar CAD. Really, this is where all the selling's happening. So in truth, if we can get over this level, then we're going to start to see more in the region of margin calls, maybe some stops being hunted here. Hence why I believe that if we keep going, we're going to trade the liquidity. Again, if we open next week and we break lower, then watch for the bid stack, in my opinion. This is where all the support is, guys. So we need to see a bit more movement to the downside. Bitcoin, again, similar picture. I've said this time and time again that I'm waiting for us to trade a little bit lower. The J period print has held up, right? So it seems like we have a lot of orders stacking. There's a lot of believers here within this bar. So, or rather within this profile. So I'm watching this level. This is the bid stack. If we can trade back into 25K, then it becomes a great buy. But for now, Bitcoin it needs to do more range, in my opinion, for me to get excited. But I'm structurally bullish on Bitcoin. I think we've started a new cycle. So it's the early days. We're probably going to get some aggressive dips in the summer as we get into June, July. I think that's kind of what we're looking at now, is that setup for that kind of a move. Sterling yen, again, was always structurally bullish on this one. This is a great play. I did cover my sterling yen position eventually up at the highs, but we're still going. So again, we had a serious build up here. I think it's a combination of longs liquidating and new positions. So that open interest is now probably picking up here on sterling yen. I think we've got a lot more miles to go in the coming weeks before we finally fell to the downside. But I think we've still got some more upside to do. So the yen is incredibly weak. The Kiwi, like the Aussie, complete letdown for us. Again, we had, well, actually with the Kiwi, we did fill the gap, and there was a gap to the downside. So this move did actually make sense. We kind of referenced that briefly, but taking out the bid stack was my surprise. So we're now turned structurally bearish. But again, I think in the long term, we're going to recover like the Aussie. So that's kind of where we sit really today. I think, you know, it's really important as we look at these things. You know, it's a short one today, but it's really important as we look at these things to kind of think about why we are profile traders. I mean, some of the cool stuff you can do with a profile, which you can't do with anything else, is you can actually do a lot of visual backtesting. So for example, you know, generally when we look at gold, we can see that there's almost always big movements coming out of P period on a weekly profile, right? So you can start to do this kind of analysis, right? So what happens often, right? And that's how we start to build really good strategies that can even be put into algorithmic trading parameters, and they really get back tested. So we can generally see that usually within that P period frame, we tend to get a pretty big move. And you can kind of look at that. Some days it's not as wild. It's either P period or JK period, right? So we got, again, we can see that move tracking down on P period, which continued into the following week. So that's, you know, and then we got J period break. So again, we can see that as we go through profiles, right? You can always split the profile to get a little bit more understanding of the price action on this specific week. Again, see that extra volume in P period, nice little pickup, and then we finally sell off, right? So if we can get this kind of data, right, and we're putting it together and we're thinking, right, what's the significant P period, right? What's the significant P period in the week? What day is it? What particular hour or couple of hours is it? And then you can go back and really take a look at that and try and figure out what's the fundamental driver. Is it something you know, that's based on the system, right? Sometimes certain things, they settle at specific times, which causes that impact into the market. So we kind of really want to have a bit more of a holistic approach as to why these markets are moving and who's moving them and why they're doing it, right? So it's important to kind of, you know, get that kind of grasp. Anyway, guys, I hope you've enjoyed the video. Like, subscribe, let's grow the channel. I'm always trying to do something really good here so that we can stop being in frameworks where we're looking at Lambo traders, we're looking at $1 million traders and all kinds of nonsense, because the reality of trading is that very few people are going to actually achieve that. It's going to be largely a fluke by and large, and they're really now just resting on their laurels because they're always people who will get excited about someone making $1 million on a trade, which is very rare. But again, you know, you might find someone make, you know, 5-6 figures on a single trade, and that's great. But then in reality, what did they risk? So what was their risk weighted return? You want to know that, because again, if you if you had exposure of like 200 grand but then you made 50, it's no good. Or if you've lost 10 trades that are worth 70 grand but then you made 50, the bottom line is that it's very difficult. Everyone, for tax reasons and other reasons, are going to be very iffy about telling you the actual balances that they're playing with, right? So there's always going to be a certain degree of opaqueness when you're reviewing other people's trading, and they're not going to tell you. It's impossible. Even I won't tell you, because there are other implications. I mean, for all I know, if you're in the US, you could be an IRS guy saying, hey, you know, I want to know your results, some other shit. Or, you know, it might not be that. It might be that you're, you know, just some other kind of bad actor, you know. And with the internet now, you've got to be very careful. So a lot of people are not going to be as public, as you're going to try and be as transparent as possible, especially if you're trying to help traders, or you run a business around trading where you want to work with traders. I mean, we're all going to be realistic here. I mean, most traders, it serves them. It's very advantageous to run a business as a trader, because not only does that come with tax benefits, but it also comes with mitigation of risk. When you take risk in the markets, you need to be able to mitigate that by some other kind of cash flow. That's just good business. That's what trading is. That's what a hedge is, right? So you see traders talk about delta neutral hedges. Well, you know, that's more cost in the market. So if there's a cheaper way to do that, which normally is by a cash flow business, then yeah, that's why a lot of traders run a business, right? It makes sense. So again, if you do stuff like that, I mean, yeah, you're going to want to be transparent to kind of aid your business growth. But on the same token, you don't want to open your bank account, because then that exposes you to all kinds of other bad actors that are going to get you into a place where you don't want to be. So yeah, so these are just some of the things that, you know, as new traders or people coming into the business, or just being aware of the internet, that's kind of what you want to be looking for. So we really want to guide traders away from that bad way of thinking, that negative way of looking at the markets, or that negative relationship people have with markets and money, and focus it a little more on developing yourself and being a good trader. But anyway, guys, enough of the lecture. Smash the like button. Till my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?